Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, just when the domestic macro numbers began looking up, we got an opposite effect in the currency markets, with the Indian rupee continuing its slide against the US dollar. However, we do not see much depth into this current round of weakness and expect a pullback in the Indian rupee at around 57.90 levels in the spot. If we notice, the US dollar index has been trading lower for the past couple of trading sessions. In spite of this, the US dollar is strengthening against the Indian rupee. Now we can attribute this to the outflow of foreign funds in the bond markets, where FIIs have been net sellers of government bonds amounting to $1.35 billion. Also, with the government going all gung-ho with respect to gold imports and introducing measures in order to curb these imports, which have been reported to be worth $15 billion for the month of April and May alone, the demand for US dollars is rising. Another requirement is the debt servicing concern of Indian firms who have over the past few years borrowed heavily in US dollars and whose redemptions are now due. All these factors do cause a strain on our depleting forex reserves. But we do not foresee the dollar, in this particular run going up to 60 or so. We expect it to consolidate a little bit from around 57.90 to 58 levels, and then probably it may rebound and go back to 59, 60 levels or so. Now we did see the euro gain some ground against the US dollar last week due to the better than expected manufacturing and service PMIs in the eurozone. We even had Mr. Draghi commenting on the euro region's economy, that the economy will improve this year, which was a more optimistic statement as compared to his previous stance. Now the euro hit a high of 1.3306 against the US dollar. We expect some profit booking now and see the euro to weaken back to around 1.31 levels against the US dollar. And domestically, the traders can go long in euro rupee pair at around 75.50 levels. Now we expect this pair to move towards 76 levels. Now we did not have much data from the United Kingdom last week. However, the pound continued its upward journey against the US dollar, hitting a high of 1.5684. Now this same trend has continued in the domestic market, and the pound has moved up considerably against the Indian rupee. Now we expect the pound to rebound from 90 level against the Indian rupee in the spot market. Traders can start short selling the pound rupee pair at around 89.90 to 89.95 levels. Now the Bank of England also refrained from adding any more measures to its monetary easing program, and this was a huge move in the market, because previously everybody was talking about more easing coming out from the eurozone and England, but we see that this is not what's transferring in the market, and the eurozone and England is holding on to their horses and they're not going for any further easing. Now the Japanese yen has weakened against the US dollar, and we expect it to retest the 100 level. An increase in the US unemployment rate could drive the demand for US treasuries in today's highly volatile economic environment. Now we advise our traders to sell the yen rupee pair at around 59 levels in the spot. Well, that's it from the Currency Advisory Desk. Thank you.